Number 1. What is meant by the term leverage? How are operating leverage, financial leverage, and total leverage related to the income statement? The term leverage describes the firm's ability to use fixed cost assets or funds to increase the return to its owners or equity shareholders. The operating leverage, financial leverage, and total leverage related to the income statement, whereas operating leverage is concerned with the relationship between sales and operating profits. Financial leverage is concerned with the relationship between profits and earnings per share. Total leverage is therefore concerned with the relationship between sales and earnings per share. Number 2. What is the operating break-even point? How do changes in fixed operating cost, the sale per unit, and the variable operating cost per unit affect it? The operating break-even points means that break-even quantity of sales, or just simplify, break-even point indicates the number of units of company's product that is produced and sold, at which point the company's net income becomes zero. As your sales grow, your variable costs increase. As your sales fall, your variable costs decrease. If you raise or lower your sales price, the new selling price must be enough to cover the variable cost and fixed costs in order to break even. Number 3. What is operating leverage? What causes it? How is the degree of operating leverage DOI measured? The operating leverage measures a company's fixed cost as a percentage of its total costs. It is also one of the techniques to measure the impact of changes in sales which lead to change in the profits of the company. Operating leverage causes when a company has fixed costs that must be met regardless of sales volume, and also when the firm has fixed costs. The percentage change in the profits due to change in sales volume is greater than the percentage change in sales. The degree of operating leverage DOI measured by subtracting the variable cost of sales and dividing the number by sales minus variable cost and fixed cost. Number 4. What is financial leverage? What causes it? How is the degree of financial leverage measured? Financial leverage means the use of fixed charges, sources of funds such as debt and preference capital along the owner's equity in the capital structure. Financial leverage is caused by a higher degree of fixed income securities such as debt and preferred equity. The more debt financing the company uses, the higher its financial leverage. Degree of financial leverage is a measure that assesses how sensitive a company's net income is to change in the company's operating income. It is calculated by dividing percentage change in earnings per share by percentage change in earnings before interest and taxes.